Hey, welcome. So today, we're diving into a topic that, let's be honest, sounds almost too good to be true. The idea of legally paying 0% in taxes. It's a subject that's usually wrapped in a lot of mystery, but we're about to break down a financial blueprint that claims to do exactly that. Let's get into it.
So let's just tackle the elephant in the room right away. Is this for real? Can you actually legally pull this off? Well, the strategy we're exploring today suggests that, this isn't some secret handshake just for billionaires. Instead, it's a very structured blueprint designed to use the existing tax code to its absolute maximum potential.
Here's our game plan for today. We're going to start with the mindset, because that's the foundation. Then, we'll look at how you define income, bring in the main tool for the job, and finally, we'll put all the pieces together to see how this whole thing works. First up, the zero tax mindset. And the central idea here is pretty powerful. It says that before you can even touch your tax situation, you have to completely shift the way you think about money in the first place. This quote really gets to the heart of it. See, most of us are trained with an employee mindset, right? You earn a paycheck, the government takes its cut right off the top, and you get what's left. This blueprint, though, it's all about an owner's mindset. The focus completely shifts to controlling your cash flow before it gets taxed. It's not just about earning it, it's about directing it.
All right, moving on to part 2, redefining your income. And this is absolutely crucial because the tax system does not see all money as the same, not even close. Understanding this difference is really the key that unlocks this whole strategy.
And boom, this slide just lays it all out perfectly. Over on the left, you've got your regular earned income, your W-2 salary. It gets slammed with the highest tax rates, and there are very few ways to lower that bill. But on the right, that's where the game changes. That's income from a business, from investments. Not only are the rates generally lower, but it opens up this whole universe of potential deductions. You're literally going from a world where you work for money to one where your money works for you.
So that brings us to the third piece of the puzzle. And honestly, it's the single most important tool in this whole playbook, the corporate shield. So what is it? A business entity, think an S-corp or an LLC, is basically a legal container you create for all your financial stuff. It puts up a wall, a shield, between your personal finances and your business finances. And why is that such a big deal? Because now the business can own things. The business earns the money and, this is the key, the business pays for its own expenses, all before you, personally, ever see a penny of the profit.
All right, this is what we've been building up to. Section 4. Let's assemble this thing. We're going to see how the mindset, the right kind of income, and that corporate shield all click together to make this blueprint work.
Okay, just follow the flow here. 1. You create the corporation. 2. All the money you make flows into that corporation, not your personal bank account. 3. The corporation pays you a reasonable salary. Now, you have to do this legally, and since this is the money that gets taxed at those high rates, the idea is to keep it as low as you legally can. And now for the magic. Step 4. The corporation pays for every legitimate business expense you can think of, your home office, your car, your phone, business travel, before any profit is even calculated. And the tax code actually wants businesses to do this, to keep the economy going. So then finally, step 5, whatever is left over, the profit, is paid to you as a distribution. The whole point is to use those business expenses, those deductions, to shrink that taxable profit down as small as possible, maybe even to nothing.
So after all that, after you pay the normal income tax on your small salary and the business has used its income to pay for all its expenses, what is the target tax rate for the rest of that profit you actually take home?
0. A big fat 0. That's the goal. By strategically using legitimate business deductions to cancel out every dollar of business income, the theoretical objective is to get the business's taxable profit down to nothing. So the money you take out as a distribution, well, there's no tax on it because, on paper, there wasn't any profit left to tax. That is the entire goal of this blueprint.
So, to wrap it all up in a nutshell, it all starts with a mindset shift, from just earning to controlling. It completely depends on understanding that business income gets way better treatment than a salary. The workhorse here is that corporate shield, and the whole process is about strategically moving money through that entity to max out your deductions and slash your taxable income.
And that brings us to our last thought. This entire blueprint is designed to work within the existing laws, using the tax code just as it's written. But it does leave us with a much bigger, kind of philosophical question. Just because something is legal, does that automatically make it fair for everyone else in society? That's definitely something to chew on. Thanks for